I think what we'll do today, again, I had lots of ideas for this webinar tonight and talking to them, but I kind of settled on dripping Canadian dividend paying stocks just because it's really how I got started and got more passionate in investing for various reasons. And what I will walk you through is kind of how you can get started as well. Definitely, any lessons learned on my part, and there have been quite a few, to be honest. Pros and cons of this whole approach, and really share about my journey right now, but where we plan to be, my wife and I, hopefully in a few years from now. What I thought I would do is probably take some sections of my agenda, maybe take a pause a little bit way through. You guys can ask any question and answers, and then we'll have a question and answer session also at the end. So this is the outline for tonight. I thought I'd talk a little bit about, what is a drip in the first place. It's not necessarily something from your tap or a leaky tap, but it is a very powerful money management tool, and we can talk about that. I thought we'd talk about what are the types of drips, because they're not all created the same. I can share with you some motivation and really how I got started with dividend stock investing. I also talk about the pros and cons of running dividend reinvestment plans. Like I said at the onset, there are a few. I can talk about where I am today and also the investing plans for the future. And then towards the back end, I can highlight any resources and references for you for further reading. And then we can open up the floor to Q&A. I'll certainly do my best to answer, your questions, but where I can, I'll also try to direct you to where you can find some more information about this. So without further ado, let's get right into it. So what is a dividend? I can appreciate we have new investors on the webinar tonight. We probably have some very seasoned investors. I won't spend a lot of time on this, but the essence is, and I put kind of the Latin root word there, which is probably goes with it saying it means to be divided. But dividends are important to understand, just because even though a stock may pay a dividend, it isn't necessarily the be-all, end-all. And I know the premise of my presentation tonight is about dripping stocks, and I'm very passionate about dividends and reinvesting. Dividends are just part of total return. So companies may pay a dividend for a variety of reasons as part of that total return. It could be very core to their strategy because they may have no acquisitions they want to buy in the short term or long term. They may not want to do any buybacks. They may not invest in any particular new services. So there's lots of reasons why a company may want to pay a dividend, but it could be very core to their strategy to reward shareholders. Second reason why companies may pay a dividend is because they're on very solid financial ground. And what we'll see, hopefully through my presentation tonight, is based on the definition of a dividend, companies really can't fake them for very long. So sure, you can have the shoddy accounting by Valiant and maybe some other companies, but really you can't fake dividends for too long, because on this third point, dividends come from company cash flow and from net income from that cash flow. So if you're not making money and you're not making consistent money, it's really hard to reward shareholders in terms of a dividend. And so that's also a big benefit to the shareholder, but it's also, I guess, a bellwether sign that the company is on good financial ground. Maybe the third reason why companies want to pay dividends is they actually want to attract investors, and this is kind of akin to what I was saying about their core strategy. Is publicly traded companies do want investors. They do try to retain those investors, and so a great way for a company to retain and maintain and actually attract new investors is through that dividend. So those are some of the big reasons why companies pay a dividend. But the root of it all is that it really means to be divided, in that you're getting basically a fraction of that company, and you're getting part of the ownership of that company in your back pocket. Why do I like dividends? Lots of reasons, actually, and I've put a bunch of them on the slide here for you. But I actually like the idea of getting cold, hard cash for my investments. So yes, you can get capital gains, and those are good. But capital gains are very, very hard to predict. especially in the short term, because you're subject to market volatility. Dividends are just the cold hard cash that shows up courtesy of being a shareholder of that given company that has stable cash flows. So that's great, and everybody likes to have a little bit of money. It actually also helps to act, for me to act and think long term. Meaning, if we've got stock prices that are going all over the place, and I think we saw it maybe if you're watching the stock market at all, or the futures and the like after the U.S. election, you know, the Dow futures were down like 800 points or something, I think, during the election night. And, you know, if you look at that one night, yes, you may think the sky is falling, but the reality is that over, you know, 5 period or 10 periods of years of time, that one night is really just a blip in the radar. And so getting a dividend quarterly or monthly from the companies that I own helps me relax a little bit and think and act in a way that's very long-term forward. There is, and I'll come to this in my presentation, I do see an opportunity to live off dividends. I'm not convinced we'll have enough of a portfolio to truly provide the necessities of life and all the want life from the capital the income that's generated from our capital. But you'll see in future slides, based on what we've got today invested and what I think we'll have invested in the future, I could see dividends paying for a big part of our living expenses. And so that's pretty cool that basically the money is working for you, so you don't have. Dividends on Canadian dividend stocks in particular are very tax efficient. They are a very low form of tax. And I won't get into all the nuances about the Canadian dividend tax credit. We can, you know, talk about a little bit of that maybe in the Q&A. But dividends are a very efficient form of tax, especially when you have that in a non-registered or taxable account. So the idea of getting paid in cold hard cash and acting long term, and also having a very tax efficient income stream is pretty cool. Again, I think I talked about this already. This is kind of, they're hard to fake in the sense that stable major companies that have a lot of cash flow and income coming in, they can't really, if they don't have that income coming in, they can't fake those dividends for very long. And a big part of tonight's presentation is obviously the reinvestment opportunities. So, you know, can you enroll in a DRIP, and how can you get basically the dividends that come into your bank account every month or quarter reinvested to buy more shares, and those more shares pay off more dividends, and more dividends by pay more cash. So I put a little link there. You can kind of check out you know, some of the posts on my site. I do put posts up every month to talk about our journey and specifically around dividend reinvesting. And it is really cool to kind of see from, you know, certainly from my end, over the years, how the net income is continuing to grow, not just because of our savings rate, but also because dividends. So what is a dividend reinvestment plan? So essentially, DRIP, or dividend reinvestment plan, is really the dividends an investor receives from a company, purchase of more stock, thereby making the investment that you have grow little by little. And you can look on that up in a host of other similar definitions on Investopedia or many other sites. But that's the essence of it. Okay, so let's get into, now you know what a dividend is, and now you know what a DRIP is, a dividend reinvestment plan. It's probably a good time to talk about types of DRIPs. And they're not all created equal. And what I'm going to do tonight is I'm going to highlight basically 3 main types of DRIPs from my perspective. There are full DRIPs. So these are the DRIPs that you typically set up with a company's stock transfer agent. And I'll highlight a couple of those in the next few slides. And then you can also obtain a single share to enroll your DRIP with the stock transfer agent. And I can talk to you a little bit how you can go about doing that. There are some various sources by which you can obtain that single share. One of them is a private exchange board. So that could be you know, a share board or investing site that basically you know, allows you to go in as a member, and you can talk to members and say, hey, a report, for example, or I would like a a share of BMO or something like that. So you can work with other members of private boards and basically get your share and your share certificates from them. You can also get your share, and this is what I did, and I'll talk about it a little bit later, is I got my share from my own discount brokerage that I'm with, and I got a certificate. So it means that they actually mail you the certificate, the actual share itself in the mail, and you can take that and you can move that to the transfer agent. So part of the process is to basically get the share not in the street name but in your name, and send that into the company transfer agent. And I have some steps for you to follow on that. The cost, again, it ranges. I think back in the day, and that's not going back too far in the day per se, 6 or 7 years ago, I think my brokerage charged me around $50 plus HSC. Some brokerages actually get more. I think Questrade, I have to confirm this, but I think they're on the order of $250 to $300 for your share certificate. So some of them are cheap. So it really depends on the brokerage. Okay, so who offers those drips? So who are these transfer agents that are out there that really allow you to do these dividend reinvestment plans on the company's behalf? So I put two big ones here in the Canadian space. There's one called Computershare, and you may not know the stock symbols there, but I can let you know what those are. So those are BMO, Bank of Montreal, that's Crescent Point Energy, Fortis is the FTS, H is Hydro, you got Suncor there with the SCUT is TELUS, and Bank of Nova Scotia. And I put a hyperlink there for you so you can copy that and check it out. And what that should show you is all the plans that are associated with what Computershare offers. What are the drips that they offer and all the companies that they support. Second one, there's Canadian Stock Transfer Agency. It used to be called CIBC Mellon when I was working with them and setting up my drips, but they have since changed names and rebranded. And again, you've got some stocks there that you can run through CST. So in order, you got CIBC, Canadian Utilities, Emera, you got Enbridge is the ENB, you've got Manulife, Sun Life, and then TD Bank. And again, there's a hyperlink there for you to check out those reinvestment plans. Okay, so you've got the transfer agents. That's one way of working through the drip process. You've also got another outlet, and that's share owner. And share owner has been in the investment game for quite a long time. So here's some stats on the screen for that. They entered the investment industry back in 1987, and they were, basically an investment dealer, and they still are to a great extent. But they broadened their portfolio to not only allow you to invest in, the BMOs, the Bank of Nova Scotias, et cetera, through the drips, but you can also invest in ETFs the same way as well. So they are a very, really neat organization, and I encourage you to check them out to see if that would fit with some of your investing objectives. So over time, on the screen also, share owner introduced the opportunity for fractional shares. And I'll come back to that a little bit later, because that's really important, because again, just like not all drips in terms of where you start them are created equal, you also have the ability through these transfer agents or investment dealers to get fractional shares. So some fractional shares, you can get even up to like 4 decimal places of share ownership in Fortis or Bell. And it sounds trivial, but if you get that compounding over many months and many years, those fractional shares really add up to whole shares, and more whole shares add up to more whole shares. So you can appreciate the power of compounding that's working with you, even for a little fractional share. Just some quick tidbits there. Again, in May, they've launched some model portfolios for you guys to check out. They're certainly one of the leaders in automated investment, and they're actually now owned by Wealthsimple. I think Wealthsimple made that acquisition back in December. Wealthsimple is really growing in the robo-advisor space, not only for ETFs and some low discount cost portfolios, but now they own share owner as well, and they have another kind of investment dealer arm. Again, not all drips are created equal. We've got synthetic drips. So these are dividend reinvestment plans that are set up with your discount brokerage. I put a bunch of them in here. You don't need to memorize them. I think the podcast by Lana will come out later, and you can always review that and check the sites. But definitely with the discount brokers that you see on the screen, and I just listed some of them. I think there's about 14 of them now in Canada. Most of them are offering really synthetic because they don't allow you to do share purchase plans, and I'll talk about that very, very quickly. Basically, that's your opportunity to buy more shares at a very low cost, basically the cost of a stamp, or you can do it through direct deposit. These drips are really only in effect when you can have one whole share, and I'll provide you an example later on. Okay, so the third type, so to recap, we've talked about the full drips of transfer agents or investment dealer like share owner. We've talked about the synthetic drips with the the TDs, the Bank of Montreal's, the Questrades, the like. You can also kind of do a DIY, and that's really kind of on you, whereby you can decide if you don't own enough shares yet. When dividends are paid, you can basically let the cash accumulate, and then you can basically buy or get that money reinvested in new stocks or what have you as the cash accumulates. And or if you do have enough money whereby the dividends are coming in, they're left, you can buy at least one full share, then what you can do is you can kind of pick and choose, kind of which stocks you want to drip and which ones you don't. So for an example, if you can think about a bunch of stocks maybe in your TFSA, you got Fortis, Bell, you don't have to, even if the dividends are coming into the amount where it will buy one full share, you don't have to necessarily turn on the drip. You can turn it on or off with your broker. So it is a little bit like I was saying, it's like a tap. You can shut off the tap, just let the cash flow in, or you can turn on the tap and basically let the drips run. Okay, so how I got started and how you can too. All right, so I'm sure Derek Foss will be very pleased that I put this slide together. We actually had a few beers together here in Ottawa a few times, a few years ago and over the years. And I did tell him, thank you very much, because you were one of the motivating forces that really pushed me, I guess, to find out more about dividend, to learn a little bit more about how a passive income machine can basically get you wealthy eventually. To borrow the headline from Moneysaver and a magazine cover that they kindly put together for one of my articles. So, for folks that may be joining from the U.S., again, the book is really written from a Canadian context, but certainly the themes apply in that with very little, I would say, or some effort, you can basically start your investing journey with, I wouldn't say no investment knowledge like Derek Foster says, but I would say with very little money, you can start investing with the transfer agents, because some of those transfer agents don't have a minimum purchase requirement, which we'll talk about. And so basically for the cost of a stamp and $10 or $15 or even $20, you can start investing fractional shares in some of these companies, and that's pretty cool. So motivation number one, thank you, Derek, because again, you got me thinking about this approach. If they are a way to earn income, we've talked about that. This is cold hard cash that's flowing into your bank account, and the dividends from established blue chip companies are usually, not always, because we can't predict the future, but are usually uninterrupted, and they typically increase over time. On that note, while we're on the topic, TELUS, if you're familiar with the big telco company here in Canada, TELUS, they basically made a commitment, the board of directors have made a commitment, and you read it on their website. They say, we're going to try to increase our dividends through 2019. So if you think about it, and they just actually had a dividend increase of a few percent recently, that's pretty power, in that you could potentially buy the stock today and earning dividends if you buy enough of that stock to drip. And not only is that stock dripping, so the dividends are getting paid, and money that's making money can make more money, but now the dividends are actually being got really a huge income machine potential. There's no guarantee, of course, that TELUS will increase their dividends twice a year, every year going forward, but they've made that commitment, and so that's a pretty great commitment for that big to make. So anyway, that's definitely a motivating factor, is understanding that the dividends get paid, they can actually increase over time. And again, if you're lucky like TELUS, will increase twice a year the next 3 years. Okay, I was also really motivated because I was sick and tired of not knowing what my investments costs were. I had basically very little clue, to be honest, about what I was paying in terms of added value for big bank mutual fund fees. I had no idea why my investments were underperforming for so long. It's not to say they were doing horrible, but when I started digging into these things a little bit more, I was really struggling to figure out, okay, I'm paying X percent for these, basically a basket of stocks, and that basket of stocks seems to be growing, because when I look at the internet and sources I'll tell you later, I see the share price going up and the stock price going up, but my mutual funds weren't nearly doing as well. So what's going on? So I'm basically paying fees for underperformance. And so really the sum of all this is that what's going on? Why I should be knowing a little bit more about the money that I make, the money that I invest, where's it going, what are those fees for? And so I started going down this road, 8-9 years ago, because I was really sick and tired of not knowing what my money was trying to do for me. I had no idea what a benchmark was. Again, I certainly do now, but it was very frustrating for me to know that I was putting my money in the hands of a mutual fund manager who may or may not perform as well as the market, and not only that, fees were forever, and that this was money I would never see again. So that was a huge motivating factor, certainly more than the first one, because like Lana said, I don't think anybody should care more about your money than you do. So I put Albert Einstein's quote there because, again, doing the same thing over and over and expecting different results is pretty much insane. How to get the share. So remember, I think earlier I talked about the share exchange board. This is one of them. I just took a little screenshot. You can kind of see there. There's drips for U.S. investors, drips for Canadian investors, Beginner's Corner. It is my understanding it's free to sign up and be a member. Again, I wouldn't rush into it, but you could sign up to one of these boards and just kind of learn a little bit more about investing. Take it as an opportunity to ask questions. The people on the forum are usually extremely helpful for beginner investors. They're also very helpful for seasoned investors. So I'd encourage you to, if you're really serious about drip investing, try to find an exchange board. And this is just one example of what I've been on over the years. And I found the moderators and the folks that run it extremely helpful. That's how you can get your first share. Basically ask somebody on the share exchange board, hey, would you mind certificating a share for me or selling me a share? And usually they'll sell you the share. There's obviously a cost to that because they'll probably charge you, the $50, the $70, wherever the share price is. And there's usually a little gratuity that you would throw in as well, $10, $15 to say, hey, thanks for going through the effort. So you would have to reimburse them for all that stuff. But at the end of the day, they would get you the share. You wouldn't have to have a brokerage account, and you wouldn't have to go through and pay a fee to the discount broker. You could pay basically a fee to somebody who actually owns the share. I didn't take that approach personally. I took a different approach. I think I alluded to it, but this is still a very viable step that a lot of people do. Okay, on the same vein, you got to know somebody. So again, our friends at Moneysaver, if you subscribe to the magazine, and you should, you'll see there's drip clubs and share clubs there. And you can go through the list there. There's people in Cornwall, Ontario. There's people in Kingston, Ontario. Again, you've got a list there, and I just took a quick screenshot of that stuff. But really, drip clubs or share clubs are another great way because, again, some of these folks meet in person. They talk about investing. They talk about whole whack of things, and it's a good excuse to get out and meet like-minded people. And again, our friends at Canadian Moneysaver do a nice job of putting together the list of volunteers, excuse me, and the contacts of some of these people. So definitely subscribe to Moneysaver and use that as a resource for yourself. There's also the DIY route as well. So you got DIY dripping, and you got kind of a do-it-your-own way of getting your own share. So again, you could buy at least one share. I think that's what the question came in is, does it cost money to buy your one share? It does. So maybe that's where you could consider buying more than one share, and then using the one share that you get to get certificated, and then you can move that off to the transfer agent. And I know a lot of bloggers, and myself included, we did that. We bought more than one stock share. We bought, I'll give you an example. I think maybe many years ago, I maybe bought 30 or 40 shares of BMO at the time, and then I got one of them certificated. So I paid my $50. I paid my HST my $50, and then I got that one certificated share in the mail, which is nice. It came in registered mail, and then I was able to take that certificate, and I was able to move it to the transfer agent and start my full drip with the transfer agent, but I still had shares of BMO with my discount brokerage. Again, I think I already talked about it. You can open an account with ShareOwner as well. And again, they've got drips available for like 500 Canadian and US stocks, and they also do ETFs as well. So a huge and very powerful service by ShareOwner. Okay, so what did I do? That's kind of what I did. So, and I've been writing about this actually recently. You can see a post there from 2014. I think I just wrote about Bank of Nova Scotia, actually. I did it then and now. What did they do 6 years ago? And what did I do just recently? Where's that stock now? Is it still in my portfolio or not? So those are my starters. I started with Bank of Montreal, CIBC, Sun Life, Fortis, and Enbridge. I started with 5. So basically I started with purchasing at least one share in my brokerage account, and then I got that share certificated, and then I started my full drip with my transfer agents, Computer Share or CIBC Mellon, who is now CST, that stock agency. So I got my share certificate, I registered my share with the transfer agents, and then I enrolled in the DRIPs and SIPs. So SIPs here, the SPPs, are really important because it's not only important that you can reinvest the dividends in the DRIP, but you actually also, with the transfer agent, not the SPP. And the SPP is a share purchase plan, and the essence of a share purchase plan is basically this, is that on any month or in any quarter by the transfer agent, they will buy you more shares. So I think I explained it maybe in a little bit. That means basically at the price of a stamp and an envelope, you can write a check to Computer Share or stock transfer agency for some stocks, $10. You have $10 this month. That's all you really have to invest. You can write a check literally for $10, send it in the mail, and they will buy you fractional shares worth $10 of whatever stock that you want to enroll in DRIP. So this is a way to buy fractional shares at a very, very low cost. And this is what the Derek Foster book wrote about a lot, is when he put on the cover, you can invest with $50 with no investment knowledge. It's not so much no investment knowledge, but I think the $50 is very true in that for $50, for $10, depending on the stock, that's all you have to write the check for. It goes to the transfer agent, and they will buy you the stock. There's pros and cons of that, which we'll talk about thanks to the reader question. But that's very powerful in that you don't have to worry about lots of fees with a discount brokerage. You can basically just, for the cost of a stamp, and find your checkbook if you still want, send it in. What I did to enroll in the full DRIPs and with those transfer agents is I wrote a letter of direction, and that's really just a little cover letter saying, hey, I'm a new guy, I'm Mark Seed, I want to start enrolling in the stock. I've attached some letters for you or some forms. Please see enclosed. If anything's unclear, please contact me. And I give them my name, my phone number, and all that fun stuff. So it's really just a kind of a cover letter to say, hey, I'm new at this. I hope I've done it right. Here's the stuff attached, and please help me out. And I encourage you to do the same. There are forms on Computer Share and the CST site where you basically download them, you print the DRIP form, and you also print that SPP enrollment form. And that, again, that's important because you want to make sure not only can you reinvest the dividend that you have with the transfer agent if you decide to go with them, but you also want to make sure you do optional share purchase or that SPP with them too. You also fill in a form of disclosure. The essence of that is basically saying, I'm not going to do any money laundering. I'm not using this for any corrupt purposes. And of course you're not, because you're all good investors. And so you need to sign a form of disclosure basically saying, I am the sole person looking after this account. You can sign on behalf of a minor. You can set up drips for your kids, and the form of disclosure and the drip forms and the SPP enrollment forms do have tick boxes and fields for you to basically set that up. And then, like I said, you send the check in to purchase more shares. So I just put a little screenshot there of what those share certificates actually look like. They may look like that. May look something similar, but they're basically they look like an artifact, if you will. Okay, so where are we at here? So what did I do? Lo and behold, I've actually written about 4 or 5 posts about how to do all this stuff on my website. I haven't got around to turning it into an ebook yet. I might do that eventually. I wrote these posts a few years ago, many years ago actually. I decided to put them up on my blog because that's how I got started. And again, free of charge. You can read it. You can ask me questions about it. You can send me any comments. I have a bias. I think it's a great resource, so go check it out, and it's under that drip page. The posts are shared with another blogger that I used to blog with quite a bit, Dividend Ninja. I think he's on to different things, maybe hosting websites and other types of ventures, so good for him. But I do have all the posts and all the links are still active, so check out those 4 or 5 blogs, and you can kind of go through stuff in detail.